Hey, good afternoon, everybody, and welcome to the closing bell here at MarketStream.live. My name is Joseph Cusick with the Cusick Group Securities offered by MoneyBlock. Here to wrap up very exciting pre-FOMC market action. Taking a look at the Dow Jones. Actually, let's take a look at the VIX first, the volatility index, the fear index, up $1 today, trading at right around 1230. What's very interesting about the VIX is this is only the third time that we've seen the VIX actually settle this month in March over 12. As a matter of fact, we haven't seen it over 12 basically for most of 2017. That's basically since the, let's say the beginning of January, where we've seen that the VIX was trading in 12. This is telling you that, market insiders might be anticipating some volatile moves. Now, of course, 12 is still relatively low historically. As a matter of fact, if you look back, we haven't seen a spike since November of last year, and that was in the 18 range. So we still have volatility really low historically, but bouncing off of the 20 and 50-day moving averages. So we have vol going into the FOMC tomorrow. Taking a look at the Dow Jones. Dow Jones recovered quite nicely today, down about 44 points at 20,837. You can see that it basically finished right off where it opened today and above its 20-day moving averages. The bulls are still in control both on the short and midterm. That's the 20 and 50-day moving average that determines that from just a visual perspective. Taking a look at the S&P 500, finished down 8 points today. Again, trying to retrace what its opening print was, just off of that opening print, so down for the day at 2365.50. But again, over its 20 and 50-day moving averages, the bulls are still in control going into the FOMC. Looking at the NASDAQ, that tech-heavy index, trading right at or very close to its open. So it finished the day down 12 at $5,382.20. But again, well above the 20 and 50-day moving average. We had semiconductors really bounce back nicely. Take a look at SMH. And then the Russell 2000 finished the day down $7.90, hit 1,362.37. Still cannot get above that 50-day moving average. So that is resistance. As a matter of fact, you're going to look at 1370 as resistance in the Russell 2000. In full disclosure, I did unwind a position for my client, so I'm no longer in the Russell 2000. Taking a look at the dollar index finished off almost its best levels at 101.73. As a matter of fact, it's now upticked at 101.79 after hours, up about 41 cents. And it's trading on its best levels. Dollar strength continues. It bounced off of its 20-day moving average on the open, and it sustained that and is now trading at 101.78 as we see it right now. That has continued to put pressure in the crude markets. Watch the crude inventory number tomorrow. That is going to really drive the crude markets, especially the West Texas contract. That's the light crude. Trading at 47.72, down 68 cents. It traded right off of its worst levels. It touched 47 today. I saw the pivot at 47.70. That's where the market finished the day, right around this level. Watch the inventories data that's going to be out at 10:30 Eastern Time. Last week we reported a build of 8.2 million barrels. We're going to watch that very closely, especially now that we have the weather that has just socked both the Midwest and the East Coast. The East Coast is having some wild weather as well. We'll see how that impacts the crude markets. Taking a look finally at the fixed income markets. Currently right now you're seeing the 10-year bond. It traded up about 7 ticks. So you have price up, yield down. Let's see if that continues going into the Fed. As a matter of fact, taking a look at the 30-year, you see that the 30-year finished off of its best levels, but up still 23 ticks at 96.20. We'll watch this one very closely because right now, if taking a look at the CME Group Fed Funds tool, 93% probability right now going into tomorrow that they're going to raise the Fed Fund futures to about 75 basis points between 75 basis points and 100 basis points. So in other words, we're looking at a bare minimum of a quarter point hike, and there's a 93% probability based on the Fed fund futures that could potentially happen. As a matter of fact, we're seeing in the May meeting that there could be an 87.5% probability that it's going to be between 75 basis points and 100 basis points, which is basically 0.75% to 1%. So you're seeing a heightened expectation of rates being moved. We're going to watch that very closely. That's going to impact the markets. Also, take a look at the gold miners. That could be a precursor for gold. GDXJ, that's the ETF that tracks the junior gold miners. That just got walloped today, down $2.16, trading on its worst levels. It broke its 20-day and its 50-day moving averages about 2 weeks ago. Really tried to mount a push to the upside, has given almost all of it back. The 2-day action, Friday and Monday, given almost all of that back, finishing right off of its lows at 33.99. Watch that very closely because that could be a precursor for gold. The gold contract, taking a look at the, we'll take a look at the April contract, is trading right now at $1,197.70. It was down $5.90. It's trading on its lows right now. And we're going to watch the gold contract, especially with the Fed coming out tomorrow. We also have CPI data out tomorrow. The Consumer Price Index is going to be coming out. We're going to see if consumer prices are going to start to increase at the rate that we've seen the producer prices, both domestically and globally. Those price pushes to the upside are going to have to eventually be passed along to the consumer. Let's see if that actually is reflected in the CPI tomorrow. All right, folks, that is it right now for the closing bell. Join me tomorrow morning, 8:30 Eastern time, where I will be doing the overnight action report and getting ready for the Fed announcement, as well as all this data that we're going to have out tomorrow. It should be an eventful day tomorrow, so join us here at MarketStream.live.